Alrighty. So, how do you know whether an option strategy has a good chance of doing well when you start trading it? Well, it's definitely not listening to your best friend or maybe some YouTuber, myself included, telling you that a strategy has done well for them and they do not show you any form of statistics or results over a period of time. So that is why in many of my videos, I always show you the statistics and numbers because we want to be objective. This way, you can take a look at the numbers for yourself and make the decision for yourself whether the strategy is suitable for you. And one of the best ways for you to obtain this statistics and data is by backtesting the option strategy. So what exactly is backtesting? Well, backtesting basically just means to test the strategy over historical data to see whether it has done well in the past. Now, of course, doing well in the past is not an indication that it will do well in the future, but at least it's a good starting point, because if you identify an option strategy that has done well in the past, then at least there is some chance that it can do well in the future as well, compared to if you listen to some YouTuber that says, hey, I've been trading this strategy for a while, it's doing good, trust me, trade it. No, instead, we want to be objective. We want to see the statistics for ourselves. So the question now is, how do we actually backtest a strategy? So this is where you want to use backtesting tools and software to test your option strategies. And there are already many backtesting tools and software in the market, and many of them are actually paid. But there is one backtesting tool that I want to share with you in this video that is free, and that is the tastytrade backtesting tool. Now, I'm not too sure whether you can have access to the backtesting tool if you do not have a tastytrade account, but if you do already have a tastytrade account, then you can definitely access this backtesting tool or software for free. So first of all, as you can see over here, this is the trading platform, the tastytrade web platform. So this is where you get to see, all your positions. So these are all my positions. You can see the P&L over there. So as you can see, this is the positions tab. If you were to go all the way down to this icon over here that looks like an arrow, right, that is going in circle, it says backtesting. This is where the backtesting tool is. All you got to do is click on it, and this is where you can start to backtest the strategy, and this is where all the fun really begins. So any strategy that you have in mind, you can definitely test it out over here. So as you can see over here, I've already done some testing on some strategies. So if you want to start out clean, to choose a strategy from scratch, this is where you want to click this link over here. It says select a different strategy. So just click on that, and as you can see, it already populates quite a few of the default strategies for you to use. So over here, this is where you already have the strategies already created for you. But if you want to do a manual one, then you can go with this. So let's try out a very simple strategy that's involving the long call. So let's try one of those leap strategy, call leap strategy that is deep in the money. So first thing, take a look at the symbol that you want to use it on. So in this case, you can see that tastytrade actually provides quite a number of different underlyings for you to choose, which is pretty good, right? So this way you can backtest on a number of underlyings, and hopefully it includes some of the stocks that you want to trade as well. So for this example, let me just do on SPY. So let me just go over to S. Okay, it's already being chosen as SPY, so I'll just leave it as that. And as for the interval, as you can see over here, they have given you quite a number of choices as well. You have the past 12 months, past 2 years, all the way to the past 5 years. And you can also choose this period where there is a volatility spike, inflation-induced bear market, so on and so forth. And you can even do a custom one. So I think if you want to go all the way 10 years back, you can as well. You just have to change the date. But for this, let me just stick with the default with the past 12 months. So since we're going to try out a long call leap strategy that's deep in the money, let us just click on this first. So as you can see, once I click the long call, it's going to just populate over here. So what I'm going to do down here is to just change some of these fields over here as you see fit. So as you know, for the leaps, I like the deep in the money ones. So I'm going to go for something like 90 deltas, because when you go deep in the money, this way your extrinsic value is not that high. So if your extrinsic value is not that high, it will decay lesser over time, which is what you want. Because if you buy a call option, then the biggest factor that it has against your option is this extrinsic value that is going to decay every single day. Now, next expiration. So as you know, I like to go for a longer term one. So let me just go for 365 days, which will represent a year. Now, what about the entry conditions? So as you can see over here, this entry conditions give you a few options. You can enter every day, on exact DTE match, or on specific days of the week. So I'm just going to leave it as every day, but I'm going to limit the number of active trades, because if you're going to do one every single day, then you really need a lot of capital. So what it does is that it's going to open one new position every single day if you leave it as this. But if I limit the number of active trades, then it's just going to open how many trades according to what I've input over here. So if I put 1, it just means that it's going to only have one position on at any one time. And over here, there's the option as well. Choose what to do when the limit has been reached. So basically, I'll just say don't enter a new trade. If you say close the oldest trade and enter a new trade, I think what it will do is that on the day itself, it will enter a trade. But tomorrow, the next day comes, it's going to close the existing trade and go open a new trade, which is not what we want. So we want to just hold on to this one trade since it's going to be a leap trading strategy. So don't enter a new trade. So at this point, I'll just leave this as empty. And the exit after days in trades, I'll leave it as empty as well. Stop loss, take profit, a percentage of premium. I think I'll just leave this empty as well. And let's just see what this backtest actually shows us. So the next thing, what you want to do is once you've already decided on all these conditions down here, just click this button here and let it do its backtest. So this is where the backtest is. Couldn't find any trades to execute. Please review the strategies. Okay, so most likely something is not right. So let me just try it again. How about this? Let me just go over the past 5 years just to see how it goes. Okay, every day, limit to 1 active trades and run backtest. Hopefully now we have some actual trades that it will populate over here. Okay, so as you can see, it did populate trades. So it's working fine. So all you got to do right now is just wait. So this backtest is actually pretty fast. So as you can see, a few seconds and we already got 5 years worth of trades. So let's take a look at how the trade actually performs. So as you can see over here, it shows you your P&L in the orange line, and then it measures against the SPY closing price. So as you can see, the P&L kind of match very closely to the SPY closing price, but you can't really tell how really the performance is just from here, but you want to see over here. So over here, you can see that the total profit and loss is about $23,000, and they compare this to the buy and hold. So as you can see, if you buy and hold SPY, your profits is only $13,000, but if you went with the leap, it's going to be much more. And let's take a look at the average profit loss per trade. It's about $4,683. The max drawdown is about 46%. And most likely, I think it's because of the pandemic. So as you can see, during the 23rd of March 2020, it was down about $8,000. So that's because there was a big move down during the COVID time in 2020. And if you compare this to buy and hold, you notice that buy and hold, the drawdown is actually lower. And this makes sense because with a leap, it's a leverage tool. You get a higher profit, but of course, at the same time, you get a higher drawdown. So over here, it shows your return on used capital. So as you can see over here, the return is 146.45%. And over the same period, if you buy and hold SPY, you can see that the return is 85.32%. So this is where you can see the leap have an edge because it's a leverage tool. But at the same time, you have to be okay with the higher drawdown, because the higher the risk in a sense, the higher the reward, because you're using a smaller amount of capital to put on the same, pretty much the same type of trade with roughly around 90 delta. So it should reflect roughly about 90% of the move. And as it goes deeper in the money, this delta will slowly increase. So if you don't know what I'm talking about, by the way, go to my channel and look for my leap strategy, my 6-figure leap strategy, where I talk about this more in depth. Now, the next cool thing about this backtesting tool over here is that you can actually see the details and the logs as well. So if I was to go to the tabs down here, you can see details. You can see that in 2019, it's in a profit, 2020, even in a bigger profit. And then 2021, right, it's a loss. 2022, it's a profit. 2023 is a profit. So this is a pretty nice breakdown. And at the same time, you can see over here Number of trades 5, trades with profits 4. Profit rate is 80%, which is pretty high, but it also makes sense because over the past 5 years, most of the years have been profitable, right? So as you can see over here, these are some of the other data you can see, and then you can actually go down to the individual trades that the backtests have made for you to see what was the entry and the exit price. So over here, let's just give a moment for this log to load. Okay, as you can see over here, it shows that the entry was on this date, closed on this date. This was the premium that you paid for the option. These are the fees, the buying power, so on and so forth. And you can see the P&L, and you can see as well the close reason. So in this case, because I didn't do anything to close it, it just left as exercised. So basically, this is how you use the backtesting software. Now let us try another backtest strategy and see how it goes. So let's go to new backtest again, and this time let us try the bull put spread. So this is the put credit spread, and let's just see how the result is for the put credit spread. So let us go to this over here. You can see credit put spread. So I want to click on this, and you want to also see that this field is what you want. So let me just try over the past 12 months first, because we're going to have quite a number of trades and we want to just break it down over 1 year and see how it goes. So I'm going to click on this. So as you can see over here, they have already populated some of the strike prices and the expiration for you. So all this, you just leave it as default because this is already the put credit spread. You sell a put and then you buy a further out of the money put. And as you can see over here, you just decide on the strike price. So over here, they gave 30 deltas. Let me just change this to 20 deltas so that our width is about 10 delta. And then the expiration date is 45. So we choose 45 DTEs. And as you know, I like to go somewhere around 45 DTEs because according to the Tasty Trade studies, this is where we also have the edge when we are selling options. So I'm going to stick to 45 DTE. Now, one thing you'll realize is that there is some slight limitation when you're using the Tasty Trade backtesting tool is that you cannot actually define the strikes by dollar. For example, if I want a $10 white put credit spread, I can't actually do this. So this is more dynamic in a sense where they're using delta. And what does this mean? It just means that over time, as SPY changes the value and also according to the volatility, your width actually changes as well. So that means that your risk per trade for each trade is going to be changing all the time. It's not fixed. If you just stick to $10 spread, you know that your risk is $10 minus the premium that you receive, and it's going to be pretty consistent each time. But if you're going to use delta, then it's going to really change, especially as SPY starts to get more and more expensive. Well, this 10 delta width is going to be wider and wider as well, which means you're going to risk more on each trade. So this is something for you to really take note of. So next, over here, you can see, should I do it every day on exact DTE match on specifics of day of the week? So let me just try every day first and just limit to, just one trade. So one trade, don't enter new trade, and let us exit at 21 DTE because as you know, if we were to hold all the way to expiration, if it's in the money expiration, then we're going to get assigned and that's not what we want. So to limit the chance of early assignment, this is where you want to exit at 21 DTE. And at the same time, statistics have already shown by the Tasty Trade team that if you exit at 21 DTE, you're going to generally have a much better performance than if you hold to expiration. So this one, exit after days in trade, I'm just going to leave it off. Stop loss, I'm going to leave it off as well because again, there are Tasty Trade studies to show that, if you place a stop loss, it's not going to do as well as if you were to just exit at 21 DTE. But of course, since you have this option down here, if you can get access to this backtesting tool with the Tasty Trade, then definitely you can play around with this to maybe prove the Tasty Trade team wrong, that their research is not correct. So you can play with this, but I'm just going to leave this off. Take profit at percentage of premium. Now this one you can choose at 50% as well, but I'm just going to leave it at 21 DTE. So everything here looks pretty good. So we're going to test this over a period of 1 year. And let us run the backtest and see how it actually performs. By the way, if you like this video so far, please subscribe and also click the thumbs up button. And also do get your free copy of the Options Income Blueprint, where I share the top 3 option strategies that help you generate a consistent income each month trading just 1 to 2 hours a day, right? So if you want to go ahead to get this copy, just head on over to optionswithdavis.com/blueprint. All right, back to the video. So as you can see over here, your total profit is 964.93, but your buy and hold is 521. So almost double the results compared to if you were to just buy SPY. And your average profit, $64. Your max drawdown is 22%. So as you can see over here, the drawdown is much higher than if you were to buy and hold. Again, this makes sense because the higher the return, also the higher the drawdown. And as for the return, as you can see over here, it's 45.95%. And if you were to do a buy and hold, then your return is only 24.82%. So this is why when you trade options, so in this case, you are selling the put credit spread, you actually have a slightly higher return. In fact, almost double the return of buy and hold because you're able to have leverage using the options. But again, at the same time, it's not without a catch. The catch is that you do have a higher drawdown. Now next, let us take a look at the details to see how it breaks down the trades. So as you can see over here, you can see that the losses overall is much bigger compared to most of the gains. This gain down here is pretty big, right? So I think they broke it down to all the trades, trade 5, trade 6, trade 7. So there was a total of 15 trades in a year. This is where you entered 45 DTE and then you exit at 21 DTE. So for the most part, your average loss is going to be bigger than your average profit because that's just how it is when you're trading the put credit spread. But the trade-off for that is that we have a higher win rate. As you can see over here, the profit rate is 80%, and it's actually pretty decent because we chose a 30 delta. So if you go back to the summary, we chose a 30 delta put spread, which means to say theoretically it should have about 70% win rate. But because we are choosing the 45 DTE, which is where we have the edge, and again, if you're not sure about the edge, just go to my channel, type the #1 secret to become consistently profitable trading options. You will know why we have an edge with 45 DTEs and above. And at the same time, we are trading it on SPY. SPY is a positive drift vehicle. So that is why over time, if you're using a bullish strategy on a positive drift vehicle, it only makes sense that it's going to be profitable over the long term. Okay, now let's take a look at the logs as well. So over here, you get to see again all the breakdown of the 15 trades. And as you can see over here, there are 3 losses, and the 3 losses generally bigger than all the wins, but it's not that big compared to the profits as well, which is actually pretty good. So there are many more tabs you can go down to, just to see all these details, which is pretty good, right? For backtesting software, you can see all these details. Really gives you an idea and better understanding of the strategy you're planning to trade. Okay, so now that I see that the put credit spread is actually profitable on SPY, I'm actually quite curious to see how it does on the other underlyings, because the Tasty Trade team actually gave us quite a number of different underlying. So let me just try some of the other underlying to see whether it actually is profitable. But of course, this really depends on the underlying itself. If the underlying has been going down, then most likely it's not going to be profitable. So let me just choose one over here. What can we choose? Okay, let me try to go for Nike. Let's see whether it's going to work out for Nike. So same thing as the SPY. I'm just going to leave everything else as the same, and let's run the back test. So let's see, is Nike going to be profitable? As you can see over here, it is not profitable. So that does not mean that if you use put credit spread on any underlying, you're going to be profitable. So this is why I say the strategy is one thing, but you must match it with the correct underlying. If you choose a good strategy on the wrong underlying, then there's no match over there because it's not going to pan out to be a positive in the long term. So as you can see over here, because Nike has actually been going down, as you can see, the Nike closing price is the one in gray. It has been going down. So your profit and loss for this bull put spread on Nike follows suit as well, because generally it is a bullish strategy, neutral to bullish strategy. So there's a big drop down here. So your P&L would definitely be affected as well. And let us go down to the details to take a further look at this. Oh, this is pretty scary. So as you can see over here, the loss is pretty big on trade number 8. So trade number 8, you lost about $331, and you compare this to the rest, this is so much bigger because the rest is about 20 something, not even $100, and you have one big loss. And most likely this loss is where the Nike, right, it just kind of have a very big move down. So again, this is where you want to really test out the strategy before you actually trade it. Now, one last thing I want to mention regarding the backtest is that there is also another limitation I found out regarding the backtesting tool for the Tasty Trade, is that certain strategies is going to be a little bit more difficult to construct. For example, the broken wing butterfly. So with the broken wing butterfly, first of all, let me just draw out the P&L graph of the broken wing butterfly so you have an idea how the broken wing butterfly looks like. So if you were to take a look at this P&L graph over here, you will see that this broken wing butterfly really is a combination of two things. You have the short put spread down here financing the long put spread. So the credit which you receive from the put credit spread, you use that, a portion of it, to actually purchase this put debit spread down here, and this is how you're able to get this structure. This is the put broken wing butterfly. So I'm using this as an example. Now, when I'm crafting the broken wing butterfly, so the put broken wing butterfly in this case, I always first want to see how much credit I get, and then based on the credit, this is where I'm going to choose my put debit spread strikes. But the problem with this software is that I cannot do that. So for example, if I was to just add another leg, okay, let me just add another buy leg. So this will be 2 contracts. And let's just say I choose, okay, I'm just going to choose 30 deltas. And for the put credit spread side, I'm going to choose 20 deltas down here. But what about for this? What delta am I going to choose? Because when I go to the option chain, I don't look at the delta to choose my strike for the long put side, right? Which is this one down here. If you take a look at the graph over here, is basically this strike down here I'm choosing. I do not look at the delta. So I cannot just arbitrarily just choose a delta, say 40 delta, because I have no idea whether 40 delta, if I buy this strike down here, is it going to overall give me a positive credit or is it going to be in a debit? So it's going to be a little bit difficult for me to do the put broken wing butterfly strategy on this backtesting tool. But for the most part, if you want to choose very simple strategies, for example, the debit spreads, the credit spreads, the strangle, iron condor, all this should be pretty easy for you to backtest here, as well as individual options. You can do it here, but for more complex strategies, then that's going to be a little bit more difficult. Okay, so this is how you backtest any option strategy, and before you trade any strategy live, definitely go ahead and do some backtest first to at least see whether the statistics show that it had a chance of being profitable over the past number of years before you start trading live. I hope you found this video helpful. If you have, please give me a thumbs up and also subscribe for more videos like this, and I will see you in the next video.